morning, everybody. Mike Vaki, Princetontrader.com, here for ntmarkets.com with your Monday morning pre-market webcast. Okay, S&P 500 E-mini futures, daily chart, and what we have seen Thursday into this morning is we had 0607 lower high versus 2117.75 high. That matched up with the highs from early March. We pushed down for 3 days. We made lows on Thursday. Those lows were rejected down at 33. That has created a potential floor between 33.25 and the low of March 13 down at 32.5, so essentially 32.33 in that area. We've seen a bounce, which we discussed last week. We're going to get a bounce. I mean, it's not Wile E. Coyote off a cliff forever. We're going to get a bounce. The issue becomes, what do the bears do with that bounce? I'm not even concerned with the bulls. We know what the bulls want to do with the bounce. They've been doing it with the bounce for, going on 3 years now. They want to bounce it, start to create higher lows, build on it, get up over the mid-band, get up over prior resistance, which in this case would be 2106, 2107, and then take out the highs. Like clockwork, right? What the bears want to do is something they've only really been able to do back in October of 2014, which is to sell that rally, even if it makes it all the way back up to mid-band, to sell that rally and then to do a lower low. That, in this case, would open up a move to the purple line here, the 200-day exponential moving average. So the ball is squarely in the bears' court this morning. What are they going to do? The bulls are clearly doing a multi-day bounce. The issue becomes, what are the bears going to do with that bounce? They are trying to take a stand up at 20. Our high is 69? Yeah. I'll be interested to see if we do a new high up in the area of the mid-band, 72.73, and what the reaction would be to that. Ideally, the bears would like to get they'd like to get back below 55 and stay there. They've really given up a lot of ground in the overnight. I mean, we're currently up 10 handles. We've been up as much as 17 handles in the overnight. So the bulls are clearly pushing, and it's all about the reaction. Ideally for the bears, we will not go back to 69. We will stay below the 50-day exponential moving average, which comes in at basically 66, and we'll build lower highs from there. That's what the bears would want to do, and they would want to close it somewhere near the Globex lows down at 47.25. That would be an ideal bearish day. A realistic bearish day. The ideal bearish day would be to go, reject the highs and go down a couple percent, but I don't think that's really in the cards. What neither side can do right now, if they're smart, is really get ahead of themselves. You don't want to see the bulls just rip it straight up and beyond the mid-band, because they'll run out of gas. You don't want to see the bears try to push this all the way back down to 33, because what they'll do is they'll solidify that 32 to 33 floor. So we're bouncing. What the bears do with it is what today is all about. So we'll see how it goes. Everybody have a fantastic day. Follow us on Twitter at Princeton Trader. Check out the website, Princetontrader.com. Come check out the chat room. A lot of new trials, a lot of new subscribers. Got some people starting this morning. Why don't you join them? If you trade this stuff all the time, we'd love to meet you, love to help you. And I will be back tomorrow morning with another webcast. Trade them well, everybody.